The Australian residential property market has now hit $8 trillion in value. That is absolutely crazy. In this video, I'm going to break down some of the stuff that's happening around real estate, around the grounds, and of course my own commentary and what my thoughts and opinions are based on what we're seeing with clients, with what we do in the buyer's agency, and of course talking to agents on the ground. But at the end of this video, I'll also give you an update on the Blockfolio challenge that I've been taking, which is basically a 1-month challenge between myself, Justin Baldori, and Jason Pizzino, 2 fellow Australian YouTubers. And the winner of the entire trading challenge will actually get 20,000 USD towards a charity of their choice. So I'll give you an update as to how that's going. We're in week 1 of 4. So definitely keep watching. Hey guys, my name's Ravi Sharma, and thank you so much for joining me on yet another episode of Personal Finance with Ravi Sharma. If you're new here, smash that subscribe button, drop the bell icon, and of course, drop me a like for the video so we can push these videos out to the people that really need it. Now, if you're interested in real estate, cryptocurrency, and financial independence, then you'll definitely enjoy all the videos that I've put up on this channel. We've passed now 105 videos on the channel, so I've been doing this for about 14 months now. So if you're interested, keep following the channel, and of course, there's links in the description below where you can actually excel your own information and knowledge bank by coming on a strategy session where we talk about real estate, cryptocurrency, and all the good stuff. Now, in this video, we're going to talk about exactly what's happening around the grounds. Now, we're going to jump into a few articles, as well as I will also be sharing what my views are on where the current market is, and a bit about, some of the other asset classes like shares and cryptocurrency. So, Australian residential property market hits $8 trillion for the first time. Residential property has emerged as the #1 pillar of Australia's wealth, surging ahead of super, the ASX, and commercial real estate. The total value of residential real estate in Australia has reached $8.1 trillion for the first time, according to CoreLogic. That's more than the gross domestic product of every country on earth, with the exception of the United States and China. It's actually phenomenal to think that's the scale that we're talking at. This puts Australian residential property at around 4 times the size of the Australian GDP and around $1 trillion more than the combined value of ASX, super, and commercial real estate stocks combined. To put this into perspective, Australia's super industry is worth $3 trillion, less than half of the value of residential real estate. Meanwhile, Australian listed stocks are worth $2.7 trillion, and commercial real estate is worth less than $1 trillion. With mortgage interest rates at record lows, this is yet another sign of Australians taking advantage of cheap debt and pouring their money into the property market. 2% deposit, federal budget to help Aussies buy a home. Single parents will be backed to buy their own home with just a 2% deposit under a new scheme to be announced in the federal budget on Tuesday, dubbed the Family Home Guarantee. From July, single parents with dependent children will be able to buy a home with a deposit of just 2%, with the government guaranteeing the remaining 18%. This is giving an opportunity to single parents with dependents with a household income under $125,000 to get into home ownership, Freiberg said. We will go further based on the success of this program. The Morrison government is also providing an additional $124.7 million in funding, which will allow states and territories to bolster public housing stocks. Additionally, Freiberg announced the government will lift the amount that can be released under the First Home Super Saver Scheme from $30,000 to $50,000. We expect the Family Home Guarantee will provide hope and build confidence for single parents to enter, or in some cases, re-enter the property market. So as I've been saying on the channel for the last 12 months, we have not seen the end of stimulus, especially when it comes to the housing industry. Housing, as you see, $8.1 trillion now in terms of the value of what housing really reflects in terms of our economy. And this should just give you an idea that the one sort of industry that they will continue supporting is housing. Now, yes, I totally agree with the fact that, housing is becoming unaffordable. It's always been the case. And I've been saying that, it's not just something that's a new narrative that's come about in the last 12 to 24 months. I think it's increased. On the surface, it comes across like the government's doing so much good for the economy. They're actually helping people that really need it. But are they actually? And I'm going to go into this in a deeper video later on, where I talk about what the effects of housing stimulus and stimulus in general, money printing, quantitative easing, what this actually does. It doesn't actually help the people that are on the poor scale or the people that are less advantaged. It actually does still help the rich of the economy. And I'll break it down for you in a video in detail. But essentially, when we see things like this coming out, it's just more and more fuel to what is already a heated property market. Now, so many people sort of come on and they watch like 30 seconds of my videos and they say, oh, look at this guy's a buyer's agent. He's probably like selling us to like go buy property, and it's actually great that property prices are going up. It's not the case. And I know there's a lot of new people here, a lot of people that haven't watched my videos from 12 months ago. And I've said in those videos too, I think in 2020, they should have let the housing market collapse. They should have. It was the perfect opportunity for us to get a reset, but unfortunately it doesn't work like that. And the way that they've now addressed and played their cards out, I'm talking about the government, they are basically putting down the fact that we will support the housing industry, and as a result of house prices going up, we are then going to have this wealth effect sort of kick in, where now we're going to kickstart the economy, and then slowly in a couple of years, we'll lift those interest rates back up, and then we're in a healthy economy. I don't think it's going to play out as simple as that. However, that's what their attempt is. Now they come out and the budget's coming out. Now they're looking at public housing. They look at, 2% deposits. Like, let's just take into consideration how much fuel they've actually thrown into the property market. What do they actually think is going to happen? Now, I totally believe, this is a good thing for people that are really struggling, that need that sort of help. But when we take a step back and we see what are the effects of this on the entire real estate market, it means more people being able to buy. We're going to go through a few more articles where we talk about how much home lending is up. And as a combination of these two things, it means that demand is at all-time highs and they're going to get higher. So where does that put us? Well, if demand is higher and supply is lower, we've got this disequilibrium, right? Where I've been saying, as long as demand outstrips supply, we will see price growth. We will also see rental demand in specific areas. So this, I think on the surface, looks like a really good thing because housing affordability is a concern all of a sudden. Why hasn't it been a concern for the last 10 years? And why haven't these policies been coming out when we needed it? Now we're in a point where you're just putting more fuel into this property market, which I don't think is a good idea. However, if you hold assets, this is music to your ears. Bounce back. Aussie rent prices record fastest growth in 14 years. Australian rental rates have surged across the nation, with the country recording 3.2% growth during the March quarter in what is the fastest pace of growth in 14 years, new figures reveal. Every single capital city as well as regional areas recorded positive growth in rent for 2021 so far. Research Director Tim Lawless indicated the growth was uneven, with rents in combined regional areas rising faster than combined capitals, 4.1% compared to 2.9% in the March quarter. Rental rates in Australia's largest capital cities fell during the pandemic amid high supply and a drop in demand as the international travel ban barred international workers and students from entering the country. We are seeing a two-speed property market. The divergence in the rapid rise of house prices versus the fall in apartment prices has been dubbed by some commentators as the two-speed property market. Guys, you can put whatever you want in terms of spins on nice headlines for a two-speed property market. It comes down to one thing: supply and demand. I try and make things very simple on this channel. I know that sometimes I talk about technical things and I try and explain it in the best and easiest way possible. But what we're trying to see here, what we're really just addressing, is this blanket generic approach saying that apartments aren't good, units aren't great, you should only invest in houses. And so you've now got, hey, people commentating and directing people to go and buy houses relative to apartments and units. Now, I've come on this channel and I've said apartments versus, houses, and where one would be better than the other. But what we've got to do is break it down from, instead of looking at the asset type, we need to look at supply and demand. We need to look at how many apartments are in this place and how many houses are there, because I would actually go to argue that there's certain places where the apartments are actually growing quicker than the houses in those suburbs. And this is where it comes down to really researching and understanding the market properly. Too many will catch nice headlines like this, break it down and go, oh, okay, great. From this, I can see that property prices will go up, rents are increasing, and that means This seems like it might be a good idea to get into apartments because, well, yes, houses have grown, but I can't reach those. But now we will see all those people who can't buy houses to come into apartments. That's not the case, right? It's supply and demand. Are people wanting to live in apartments in that area? And I've actually got apartments in my own portfolio that have actually grown faster than properties that I've got in Sydney that are houses. Now, just think about that for a second. It goes against everything that's being said, and this is the importance of research. It's not just about using these things as the end result of all of the research you can do. It's about deeper diving into what is available to you, but these things should definitely prompt you as well as these videos as well. System is warped, brutal effects of soaring property market. Anglicare defined affordable housing as costing less than 30% of a household budget for low-income households. We urgently need to build more social and affordable housing so that all Australians have the prospect of a healthy and stable life. It's not much to ask. Everybody's Home is calling for the government to prioritise housing affordability in the coming budget by investing $7.7 billion into the construction of 30,000 over the next 4 years. It's also calling for a 50% increase to the Commonwealth rent assistance payment. That would mean the rent assistance for a single person without children would increase from $70 to $105 a week. So we see house prices go up, affordability is now a concern, right? And I've been saying that it should have been a concern for a very long time. I think the system is warped. So we've got rents increasing, capital growth increasing, so property prices going up, and now we're getting benefits that are increasing. We had JobKeeper, JobSeeker, JobMaker, whatever else came after that. But now we're seeing 2% deposits. We're seeing the government guaranteed deposits. We're seeing now rent assistance calling for increases there, and I think they'll get it. What are these things alluding to? All roads are leading to one thing, which is inflation, right? And something that, it blows my mind when the RBA sits down and they go, well, no, inflation's not within our target of 2 to 3%. We will continue doing what we need to do. We clearly have a problem, right? And so many people are sleeping at the wheel looking at this. Now, I'm not saying that, investors should not be investing anymore, because I would go to argue that, some investors actually provide better housing options for people in certain locations because they're able to go in, they renovate those places, or, developers go out there, build new homes, and they provide homes and housing for people. However, when you actually deep dive into this, there's so many moving pieces to the puzzle that I think it's leading to one way, which is where I keep saying 3 to 5 years is all you realistically have when you're looking at building wealth through real estate. That's why I come out on the channel and I talk about other things apart from real estate. I talk about cryptocurrency, which I think is the future. I talk about collectibles and how you want to be looking at alternative assets to hedge against everything else. And I also talk about happiness and balance, because there is no point in going out there getting greedy. And some people, may come out and say, look, Ravi, you've got this many properties. Do you really need them? Well, I'm taking care of my own financial future and for my family, because we clearly see no one else will take care of us. The government does not care, and they'll come in at the last hour and say, oh, look at how great we are, right? But at the end of the day, they're coming in at a time where it's very beneficial for them to pull some certain triggers, and we're not seeing beyond that. First home buyers priced out as investors flood property market. The number of loans taken out of mortgages rose 5.5% in March, with over half of those going to investors, new data has revealed. The Australian Bureau of Statistics released new figures today which saw property lending rise to a record high of $30.4 billion. Not only are property investors taking over, but they are coming in with the big bucks. The value of loans of property investors rose 12.7% to $7.8 billion in March. Meanwhile, first home buyers are getting edged out of the increasingly competitive property market as the number of Aussies looking to get their foot on the property ladder fell by 3.1%. ABS said commitments still remain high and are 58.3% higher than March last year. It was always going to happen. We've seen the first home buyers, the owner occupiers, they're still operating, and they're operating at huge numbers. But now we're seeing the influx of investors come in because they've gone, oh, hold up, I've got all this money saved up and I put it in the bank account and I earn nothing. I could put it in shares, but that's also like nothing. Now I could go to crypto, but I don't understand it and I don't want to understand it. I'm going to go stick to something I know, which is real estate. This is why so many people are coming in. Now, when it comes to crypto and real estate, they've all got their pros and cons. But what we're seeing now is that investors are coming in and they operate at a different level. They're not emotional. They come in and they look at the numbers. Well, good investors, that's how they should be looking. And this is what I was saying 6 months ago. I said, look, guys, we are getting driven by first home buyers FOMOing in. They're trying to get these incentives from the government. What's going to happen next? Well, we're going to see investors come in, and I don't think we've seen the full effect of what they're doing at the market. Now, when I say they, I mean, clients and other investors, but I also take, accountability for the fact that a lot of people need to take action, right? In a time like this, when you're only getting 0.1% at a bank, yeah, you should go look for better returns. At the end of the day, those who actually stay offensive and they actually take action in this market will do really, really well. It's been the case forever, right? As much as people want to deny it and they say, oh no, emotionally this and that, at the end of the day, the stats work, the numbers work. And that's why the rich get richer and the poor get poorer. This divide is not going to change by me expressing my thoughts and saying, guys, stop buying property. At the end of the day, this is bigger than you and I, right? And that's a fact, because when the government and the RBA that fundamentally controls the money is then putting out messaging accordingly, well, what's one video on YouTube from a small creator like myself going to actually do? Australian house prices soared 500% over the past 25 years. Australian house prices have soared by more than 500% over the past 25 years, but while capital values have grown, yields have fallen to all-time lows. Adrian Kelly said property investors have been driven more by expected capital gains rather than rental yields. According to data from REIA, the median price for Australian housing inflated from $160,000 in 1996 to $825,000 in 2020. It's the tale of two cities, with other dwellings such as units and apartments seeing capital values increase by just over 400% in comparison. However, these assets produce higher yields. The data shows that over the past 5 years, housing grew by 25% from a median 683,000 to 825,000, while other dwellings rose by 10% to 600,000. Kelly said that over a 25-year period, Australian housing yields tightened from 5.1% to 2.9%, while other dwellings have recorded a drop in yields, but not as dramatic, falling from 5.2% to 3.7%. The advantage I have in my position is I get to talk to a lot of different people across strategy sessions, and they have a lot of different backstories. They also have different mindsets, and it allows me a lot of context around what's happening. I get a lot of context from the people that are looking to invest, have probably already invested or now looking at getting a strategy together. And then on the flip side, I'm seeing what agents are reporting to me. And then I've got the research that I personally do as well as the team. And bringing it all together gives me a lot of context. It gives me a lot of perspective. And I'm happy to share that with you guys with this channel. But before we continue, I want to update you with my trading challenge and how that's actually been performing. So as you guys know, I started a trading challenge for 1 month with Blockfolio. And there's a link in the description below for you to download the app yourself. You can invest and you can actually monitor all of your portfolios across in just one app. The interface is beautiful and you can actually see it. Here are my results so far from week 1. It's about 10% growth, which, to be honest, when you're seeing that across any other asset classes, like with real estate, you're seeing it on leverage returns, of course, but the barrier to entry is a lot higher. And when you put that against what you can earn in the bank, which is like 1% a year, earning 10% on your money in just 1 week is pretty incredible. And that's cryptocurrency, right? Now, the market has been sort of shifting. It's been chopping and changing for a bit, but I had only made one trade this week, and that was to actually sell half of the sushi coins that I owned and went into XRP. So XRP is one of those coins that has a big community, a big following, despite what my personal thoughts are on, XRP and the entire project that Ripple has there. At the end of the day, we're seeing things like Dogecoin go up to all-time highs and crazy sort of numbers. I feel personally a lot of that money is going to shift across from there after the Saturday Night Live, which should be airing today with Elon Musk, to then come across into something like XRP. So I've now decided to sell half my sushi and come across into XRP. Now I'm keeping a close eye on Radium, which is my highest holding, because what I see is in the Solana network, I see long-term potential. So in my personal portfolio, I'm invested heavily into Solana. I will continue dollar cost averaging into it, but I do see huge potential, especially with what ecosystem they've actually got. Radium is a big part of this actual, ecosystem. So for me, that's where we're at the moment. I think the other boys have put up their own specific videos about their trading challenge as well. So it'll be really interesting to see what happens in the next month. Now, as a concluding sort of thought around what I'm seeing, context I've got and the perspective I've got on the market, I think we are seeing that level of FOMO kick in, but I don't think people realize how early we are in this entire phase. I still think we have a good 5 to 6 years of until we hit that point where I think the reward is just not good enough for the risk you have to take on. Personally, I think the next 3 years is a fantastic opportunity to be buying. I personally would be buying a lot of the real estate I could buy. I would be investing heavily, knowing that we've just come out of what would be, as part of an 18.6 year property cycle, a mid-cycle slowdown. What we see after that is about 6 or 7 years of growth, and I think we've seen the first year of the 6-7 years already happen with 2020. So for me personally, I think I'm very bullish on the market with real estate. When it comes to crypto, there's videos on this channel. I've got a playlist now for cryptocurrency. You can definitely check out a link in the description below to access that playlist. I bring out videos, 3 to 5 videos every single week about passive income, cryptocurrency, financial freedom, and real estate. So if you're new here, definitely subscribe to the channel, and dropping a like would help support the channel to a whole nother level. So guys, I hope you've enjoyed this update. Let me know in the comments down below what your thoughts are on what you're seeing in your markets as well. I'll catch you guys in the next video. Thanks guys.